I'm Steve Platt with Archer Financial Services and talking oil today. Crude oil market has moved rather dramatically here since October 1st. We've moved from a high over $75 to as low as $50 last week. And actually, the market has shown some real changes in terms of some of the main fundamental influences that I've followed for over 20 years. The key, I think, is certainly the changing power within OPEC. No longer is OPEC a solid organization attempting to prop up prices. Instead, it's broken down into the minor producers and the larger producers. A major change that occurred over the past year was certainly the influence of Russia in OPEC deliberations. That has led to a rather coordinated policy by both Russia and Saudi Arabia, along with the U.S. growing dominance in terms of world production levels as well. That has led to those three producers really basically moving the market one way or the other here recently. I think the biggest factor that has been apparent has been this changing and shifting power of OPEC in terms of those members, forcing themselves in terms of the general world economy in terms of pushing production either up or down. Recently, we've seen a lot of pressure by the U.S. on those two producers to raise their production levels in order to get prices down. That has been largely successful in conjunction with the U.S. policy of granting waivers with respect to the Iranian sanctions, which had been a big force contributing to the strength of prices. Those actions have been basically leading to some weakness that we've seen in the market here recently, and the dramatic declines that we've seen in crude oil prices over the past month and a half. I think at this juncture, one really has to watch closely the G20 meeting coming up this week. That is a critical meeting in terms of getting the leaders from both Russia, Saudi Arabia, and the U.S. together to discuss possible oil policy and the direction of oil policy in terms of their own production levels. We've seen Saudi Arabia pretty much back off from some of the talk that OPEC will take action at their meeting on December 6th. I think at this juncture that's still up in the air. It's quite possible we'll probably go back to the old agreement, which had basically limited the production of those members, while the U.S. does not necessarily have any ability to really control their own production levels in terms of shale. That will be a main consideration in terms of the discussions. I think at this juncture, OPEC, outside of both Russia and Saudi Arabia, is pretty much a rather stable entity, with the exception of maybe a couple producers, be it Libya or possibly Iraq. Those members do have the ability to increase their production. But on the other hand, most of the other members are pretty much meeting their capacity limits and that sustainable production levels much above where they're at now is probably not envisioned. I think at this juncture, we do have to watch some other factors as well. The economic prospects for the global economy still have to be considered. They've been talked about as weakening and a force that has led to also some of the weakness in values. With the market coming under the kind of pressure we've seen, it's quite likely that we will see some of the emerging markets start to come back, particularly if the dollar stabilizes here rather than keeps going up. On some of those economies, it's been a marked pressuring influence. I think at this juncture, that's probably starting to ease up. We've seen Brazil start to show some growth signs, and that could be a sign that other members, particularly India, which could benefit as well from the lower oil prices, start to show some strength. So overall, at this juncture, this $50 level looking certainly attractive, but a breakdown toward maybe a 45 level can't be ruled out given the trend that we've seen downward. Don't suspect that the world economy and the major producers of Saudi Arabia and Russia will be able to handle prices much below those levels at this juncture, and will probably actively try to support the market, particularly if the U.S. will allow them to. So at this juncture, I'd be a little bit more inclined to be a buyer. Certainly the options are an attractive way of participating in this market, given the volatility we've seen. These are certainly my thoughts and not those of ADM Investor Services, or Archer Financial Services. Thank you.